Happy Monday. It is your favorite local real estate expert, Joanna Arnold, right here in Baton Rouge. And today we are doing Money Mondays, real estate edition with Ryan Hernandez, local mortgage lender with Hancock Whitney. Ryan is going to be helping us navigate this crazy market that we are currently in and the high interest rates. And as the market shifts, he's going to help us to find out some creative low down payment financing options that we have that we may not be aware of. So I'm going to let Ryan introduce himself. He's amazing, you guys. I'm going to let him take it away and get himself introduced. Go ahead, Ryan.
Sure. No, thank you, Joe. I appreciate it. It's good to be here. It's good to be here with you. It's good to see how you're taking your business to the next level and doing what you can to educate everybody and to really be a resource. Because at the end of the day, that's what we're here to do. We're here to educate and to figure out a way to get people into homes and to do it the most cost-effective way possible. And so, as fiduciaries, I really take that to heart, and I'm excited to team up with you and make that happen for people. And again, I'm Ryan Hernandez. I'm a loan officer here in Baton Rouge. I'm able to originate loans across the country, but more specifically, I like to focus on the Baton Rouge market, New Orleans, a little bit of Texas, but I live here in Baton Rouge. My office is here on Highland Road, and that's where I do the majority of my business here in town.
Gotcha. All right, Ryan. So let's jump right into it. Like I said, the rates are super high. People are kind of on the fence. The buyers are a little bit on the fence. Last one, we went over the 2-1 buy down, but this week we want to kind of switch gears a little bit. We want to talk about some creative financing ways that you have with low down payments. So I know Hancock Whitney has this amazing program. I think it's the Opportunity Loan. Is that correct?
That's correct. Yeah, it's called the Expanded Opportunity Loan Program.
All right. And I know that you have been pounding this loan into me. You tell me about it every chance that you get. Every time I list a property, you let me know that it's eligible to qualify for that loan. And I know just in talking to you, like there are some exceptional things that go on with this particular loan. So can you start off basically with telling us exactly like what is that loan and what, how does that kind of work?
Yeah, of course. And no, you're right. I'm guilty of that. But what can I say? Ever since we rolled out the program last year in November, I recognized right away what a difference maker it was. And to be honest, I actually purchased my personal home in December using the exact same program. So
wow,
it's not just I'm a believer, and I'm really passionate how it can help people, and it's been a real game changer for a lot of new homeowners, and I'm really proud of that. And you mentioned, creative ways to come up with a lower down payment. The first myth was, okay, I need 20% down, right, to buy a home.
All right.
Well, that's not the case, right? With education, we've learned that there's loan types out there. For example, we have rural development, which is another zero money down program, right? You have an FHA loan, which is a 3.5% down minimum down payment, right? And so
right.
FHA, rural development, and even VA is another one of those options if you are a veteran or have that on your loan, right? So those are some of the common new loan types for first-time home buyers, but not just for first-time home buyers, for any home buyer who isn't necessarily putting that 20% down.
Exactly. Most people don't want to put 20% down, right? Like if we don't have to, right?
Well, listen, it's great if you have it and that's what you believe in and you want to lower your monthly note, then by all means, you can't go wrong. However, a lot of people seem to think now, and I tend to agree, if there is a recession looming or if the market isn't performing the way you'd like to, and you see your 401k not performing the way you're used to or you'd like to, you want to stay as liquid as possible right now. That means keeping your cash in the bank, right?
Exactly. I agree. I totally agree.
And that will segue us into the Hancock Whitney Opportunity Loan. It's a really great loan. And listen, it's a conventional loan, which typically is your best possible loan type for home borrowers to build wealth over time.
So why do you feel that's the best?
Because
people don't really understand like the difference between loan types. So why would you say that that's the best to actually help to build wealth?
Yeah, of course. And that's a really good question. The main reasons is because let's use rural development for example, right? Which is another zero down program. However, there are some income limits with rural development. For example, Joe, if you and I are married and we're buying a house together, if
Mhm.
we make over X amount a year as household income, we technically couldn't qualify for the program. And those loan types are great and they serve a really good purpose. And keep in mind, it is for a property outside of city limits. So there are
Right.
some restrictions, right? In addition to the
Mhm.
income. Well, there's a funding fee involved with rural development. There's a 1% funding fee, which is tacked onto your loan amount that doesn't go toward anything and can possibly eat into your possible equity down the line. So
Gotcha.
it's a really good option to get into a house, but there is a funding fee and there's also mortgage insurance on the loan that is there for the lifetime of the loan, which is also similar to FHA, right? There's a funding fee and there's also mortgage insurance that is there for the life of the loan, regardless if you have more than 20% equity in the home.
Okay. So are you talking about the PMI?
Correct. So,
Okay. Break that down for us.
correct.
What's
So
the PMI?
yeah, so PMI, that's private mortgage insurance. So remember how we were talking about you have to put 20% down, right? To
Right.
get into a home? Well, not necessarily. So for borrowers to get into a home, you have to qualify for a loan, but if you're not putting the 20% down, you have to pay something what's called PMI, private mortgage insurance,
Mhm.
which is a part of your note. And so it's included with your monthly note. However, that allows you to get into the house, but it goes away after you have 20% equity into the home, and it'll automatically fall off when you have 22% equity in the home. So,
Gotcha.
depending on your credit score, depending on the loan type, the amount can vary, but it can range anywhere from, $50 to $150. It really depends, but it is an extra charge that's lumped into your monthly note that doesn't necessarily go toward
Towards anything.
paying down the principal balance.
I
So,
gotcha. I
mhm.
gotcha. So jump into the opportunity loan. Like tell us what I know it's 100% financing,
Yeah.
but tell us what makes that so different from the other loan types that you just mentioned.
Yeah. So for starters, it's a conventional loan, but you don't need, so there's conventional loan types where you can put 3% down, which is a really great option. There is
Hmm.
criteria to qualify. However, that is the minimum down payment for a conventional loan, which is the most desirable loan type, depending on your credit score, right? But
Right.
with the opportunity loan, it's a beautiful thing because you can put zero down. And the way we're able to get around that minimum down payment is because we're going to keep this loan on our books and service it. So it's a portfolio loan. So the bank chose to waive the mortgage insurance and the down payment requirement to incentivize borrowers to buy in areas that we serve.
Okay, so I didn't know that.
Mhm.
That makes a lot of sense. So
Yeah.
most people don't know, like once you close on a property, whatever mortgage company that you're with, they usually turn around and sell your loan. Your loan can
Yeah.
be sold probably numerous times because that's happened to me
Hmm.
personally, where my loan has been sold at least 2 or 3 times. So a lot of people don't know that. So that
Yeah.
Hancock Whitney actually keeps that loan in-house.
That's correct. We are going to
Okay.
service the loan and keep it on our books. And so you're stuck with me. So, mhm.
You're not taking the payments though, Ryan, right? You're not.
No, 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 no. I wish, but no, not
All
yet.
right. Yeah, I don't want
Hmm.
you. I don't want you taking my payment.
Hmm.
I'm messing with you.
For sure.
So tell us. All right. So we have it's 100%. Hancock Whitney is going to service it. So that's what allows them to waive a lot of the different fees that come along with it. But what other criteria qualifications does this loan need to meet in order for people to qualify?
Yeah, sure. So it is based on the areas of town that you're willing to purchase. So it has to be your primary residence, right? So just
Hmm.
like your FHA loan type, just like your rural development, it has to be your primary residence, meaning me as a home buyer, I intend to move into the property and live there as my homestead within 2 months, and you're going to sign that at closing, and then you intend to live there for a year. And
Okay.
so, yes, your primary residence, and listen, there's no income limits either. So if you make $50,000 a year and can qualify, that's awesome. If you make $2 million a year, tell me how you're doing it, but also you can qualify for this loan type.
Right,
So
exactly. So that's good. So
it's
it's
the
no income, like anyone can come to you and really qualify for this particular loan.
exactly, as long as you're looking for a property in an area that qualifies. And by the way, we have maps, and Joe, you and I have talked about areas that qualify, and
Yeah.
that'll be something that if you're interested, you can call me or Joe, and we can share maps with you, and we can really go over the areas that do qualify and why they qualify. But there really are a lot of generous areas and beautiful homes and neighborhoods in both Baton Rouge, New Orleans, and really across the Southeast. But
Right.
for our conversation, we can really focus on
Time
Baton
purposes.
Rouge.
Yeah,
Hmm.
for time purposes.
Hmm.
And so I will, say that a lot of my listeners that I've had recently, because
Yeah,
it is a very wide area, they have qualified for this loan. And you guys
yeah,
even have special signage. I've seen special signage that you actually put out to let buyers know that this home does qualify for that loan.
yes.
So another important thing about this particular loan that I think is very important that people know, like, I hate talking about interest rates, but interest rates are high. So I know with this particular loan, it's not the standard market rate. Is that correct?
That is correct.
Okay.
Now listen, you could have the best credit, anything above like a 740, for example, you have excellent credit, and you're going to get the best possible financing terms. Now listen, rates are a little higher than they were than maybe what your buddy bought a house for in 2021, 2020, even earlier this year. It's been a wild ride. We're fortunate this past week, we saw a little bit of a dip. And so
I saw that. Yeah.
it's not, so it's a really, really, if you've been on the fence, take this as a call to action. And you can always count on this opportunity loan being priced below the market rate. And it's going to be priced similar to your FHA and rural development, but you don't have the funding fee or the mortgage insurance. And so you're already a step ahead. And it's really been, I want to say, a saving grace. However, people who couldn't get qualified beforehand
Hmm.
or didn't have the purchasing power they thought they could because of the rising rates, this program has allowed them to get into the house they want and really just purchase a house that when they thought they were having to call it quits. So I'm really proud of that. And that's why we do this. So,
Right. So is it safe to say, so say for instance, I have a client and
mhm,
maybe they have initially qualified for FHA loan or maybe even a traditional conventional loan,
sure.
but is in the area
Mhm,
where your opportunity loan does qualify. Is it safe to
right.
say that this person could possibly come over to Hancock Whitney and be able to qualify for the opportunity loan as well and be able to save so they can keep the down payment that they were going to put down, they can keep the PMI, right, and possibly get an even lower interest rate than what they had with the prior pre-approval? Is that correct?
That's correct, Joe.
All
And
right.
listen, it's a conventional loan, so you do have to qualify for a conventional
Oh
loan. And
yeah.
so you have to make sure your credit score is in line, and I can help look at that. I can help if needed, coach it up. But bottom line is, it's just a better deal. If we want to talk about math, it's mathematically just a better deal.
Right, the math
And
is mathing, right.
listen, the numbers don't lie. And another really important factor is, we talked about how can we get creative, and that's loan type aside, but the market has shifted a little bit, especially since the beginning of the year. And
Yeah.
so, with that being said, reading over these purchase agreements, sellers are willing to negotiate now because their homes are sitting, and for whatever reason, they really need to just get rid of it to move on and collect the proceeds. And so as a result, they're giving more closing cost concessions, meaning they're paying for all or a portion of the buyer's closing costs. And so, Joe, if we look at it, if I'm buying a $300,000 home and I'm getting $10,000 of closing costs, or there's a chance where I could go to the closing table and not have to bring
No money out of
anything.
pocket. No money out
No
of
money
pocket.
out of pocket.
Exactly.
Just start making your
Exactly.
payments. Exactly. Just start making your payments. If we close today, you'd be making your first payment January 1st without having to dip into your bank account. So it's really special. And we're proud of this. And another good part about it is the program allows the sellers to provide more concessions you normally wouldn't be able to. So
Okay.
typically, yeah.
So typically on a conventional, you can do about 3%. Is that correct? Am I right with that?
Correct. So if you're not putting more than 10% down, the seller concessions are capped at 3%.
Right.
However, with the program to help buyers out, it's actually capped at 6%.
So just like a FHA loan, right?
Well, FHA loan isn't quite at 6%, but
Okay.
it's
That's why
more
you're
than
the lender and I'm not,
no,
right?
no, it's all no, listen, we're a team.
Right,
It's all good. Listen,
exactly.
I wish they could pay for all of it. But
Right.
for people who aren't putting the 10% down, which, I don't expect people to have 10% in their bank account willing to, put into a home. That's tough, especially when you need to buy furniture, new art, you have a baby on the way. That's a lot to plan for, right? So keeping that
Yeah.
money in your savings or keeping it in your 401k, we're really proud that that's a real option, and we've been closing deals and making that happen. So
Right, right. So I think this is a great loan option. That's why I really want to bring you on here to talk about it, because I don't think people understand the power in it, right?
yes,
And so it's very beneficial for them to know that this program is out there. It can help them save money, especially in a time that we're living in now where everything is so much more expensive. They
correct.
can save money to buy that more expensive furniture or to pay that more expensive furniture company or something like that.
Yeah,
So, before we close out, let me make sure we don't have any questions, because I want to make
sure.
sure there's no questions. And if anyone has questions right now, feel free to go ahead and drop them right here in the chat. Um, we do have somebody. I remember this guy. I remember you referred him to me. So I brought my car from him. You referred me to him. I
Oh,
remember this. Vishnu, that's his name, right? Remember
yeah, that's
Vishnu?
him.
Yeah. He just said he purchased his first home in Texas. You referred me to him, and I went and brought my Lincoln from him a few years back. I went back looking and he was gone. But
I thought you were driving. Are you driving an Aviator or a Navigator?
so I'm driving an Aviator now, but I purchased my MKX from Vishnu. You referred me to him. I remember that.
That's
Small world,
amazing.
right?
It is a small world, and I helped finance his house in Austin,
That's
where
what
he's from.
that's what he said in the chat. He said you helped him to finance his home. So that is
Mhm.
awesome. So that just lets us know that you can do this even in Texas, right?
Yes. So the opportunity loan is for specific markets. Baton
Okay.
Rouge being the predominant market that we want to really look at and help people. New Orleans being another good option. Houston as well. But we can
Right.
do loans across the country, and obviously Austin was a fun one to do, and especially for my best friend. So
Right, right. And for
mhm.
my great car salesman, he was awesome.
Yeah.
So I'm gonna allow you to just let people know, like, where can they follow you at? How can they get in contact with you? Because I think this is something very, like I said, it's very beneficial that people should definitely be taking advantage of. And I don't feel like a lot of people are taking advantage of it. So Ryan can send you the map. You can contact me, you can contact him, but he can send you the information that you need so that you can see if this is a loan that would help benefit you in purchasing a home. So tell them how they get in contact with you, your Instagram, your Facebook, all that good stuff.
Yeah, definitely. Listen, I'm working on a cooler Instagram handle, but for now it's Ryan SH5 RYAN
Okay.
SH5. I'm on LinkedIn. You can Google me, and I'll be on the Hancock Whitney website. And also I'll post my cell phone and my email in the comment section. And so I'm really passionate about this. I want to help people, and I really want to educate people that if we're on the fence, then let's have a conversation. I don't bite. It doesn't cost you anything, and it never hurts to be more educated. And whether it's today, 3 months from now, a year from now, as long as we get our ducks in a row and you can attack the home buying process with confidence, it's just going to put you on a whole nother level, and it'll really benefit you in the long run.
Exactly. I totally agree. One of my
Mhm.
things is always making sure that our clients are educated, that they feel very, very confident when they're going out here and they're making offers on home, and they know exactly what's happening in the process, and knowing that they have options, right? Knowing that you
Exactly.
don't have to do this, like you have an option to do this. So you guys have Ryan's information. He's going to also drop it in the chat. And you can also follow me on Facebook and Instagram at Joe Knows BR. I'm always here to help service you in the Baton Rouge to New Orleans areas. And that's all we really have for today. I hope this was helpful. If you guys have any more questions, like I said, drop them in the chat and me and Ryan will be sure to answer those for you. You guys have a great night.
Thanks, Joe.
You're welcome.
Bye.